Hi guys, how are you? Welcome back to Real Macroeconomics and Investing. Welcome to TradingView, YouTube, my subscribers, and I guess I should add Twitter in there too, because it does go on Twitter. All right, how you guys doing? Welcome. All right, so it's been a month. Ooh, oh my gods, that's a long time. All right, why? Well, again, I am not the most articulate guy in the world to sell you some cute story every single day. Market's going up, market's going down. This is right. Uh, I hated it as a young trader. I just wanted needed somebody just to tell me what I needed to know, and that's it. I didn't need someone to sell me a cute story every day. Well, the Fed sucks, and Biden sucks, and Trump sucks, and this sucks, and that sucks. That's easy to do. The hard part is getting the analysis right and doing the good work. So I want to be the quality guy that you guys come to, and he's going to give you his most honest opinion, I should say, as to what's going on in the markets, and as accurate as I can possibly make it, and as simple as I can possibly make it, and I hope I can deliver on that. But unfortunately, that requires me not saying anything sometimes because it's just not going to work out. And I want to have a very high accuracy rate, so you know, as much as I can. So look at this, right? This to me looks like a topping pattern. The only thing that's missing is this or this. We don't have that here, do we? Now, I could be wrong. This never comes. I look stupid. It's like, oh, Nick was telling me it was topping and it didn't happen. Well, I don't have a crystal ball, so sorry. But gun to head, this is good. Probably going to come. Uh, Now, more on keeping it simple. All right. What do you see here? Right. Very simple. What do you see? Just a plain chart. What do you see? Lower highs. What else do you see? Lower lows. There you go. Don't make it more complicated than that. All right. I'm going to add some stuff here. There we go. Now, what else do you see here? Well, consolidations. Right. Consolidation. 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 And they're all going down. Now we can say this is a consolidation. This one went up, but it failed. Okay, so even when you look at the consolidations, ultimately they resolve to the downside. Again, bear market. Now let's talk a little bit about bare knuckle charting, the way I do my charting. I don't do Elliott wave, so please don't tell me I do. I do Nick wave. And the purpose of waves is to define structures, and then the structures are going to tell us which way they're heading and which way they're likely going to go the next time around. So this is a 1, 2, 3 down. It's a wedgie looking formation, right? It's pointing down, so the next move is going to be up. Simple. It's not complicated, okay? And then we have this structure in here, tight, 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 tight. It's not wave, but it's another structure that we have. It's a tight, 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 tight. Boom, boom. Here comes the correction, right? Which way is this structure heading? Yeah, down. Of course, it's going to have to correct at some point. But it does not mean that's a bottom, all right? It's not a bottom. It just has to correct, just the way markets move. Now, if you look at this structure right in here, all right, what is this? It's just a consolidation, gibberish. So if I come out and I'm like, I will look stupid, right? Because I'm going to end up wrong no matter which way I say. It's going up, it's going down, whatever. I'm going to end up being wrong because it's just gibberish kind of consolidation going back and forth, back and forth. Now, again, we have a set of lower highs. So the question now is, it's not whether it's going lower, okay? Question now is, from where is it going to go lower? Is it going to go lower from here? Or is it going to have one more up and a 1, 2, 3 up and then start to fail? That's the magic question, all right? So I can't tell you that right now, but, you know, ultimately will resolve somewhere to the downside. Now, that has more to do with macroeconomic understanding than it does so much than it does charting. Although the charts are giving you a clue because, again, right, you can't say we're going to be bullish unless we break out of here. And that's got a lot of work to do that. A lot of work. All right. Can I be wrong? Sure, of course. That's a given. Um, Now, when I was a young trader, I thought I was a genius. Genius, baby. I was telling everybody how to do shit. So I was like the the guy at the roulette table at the casino with the comb over with Brute by Fabergé. Uh, spotting patterns, how to trade. Everybody has a strategy when they go to the casino. They have a strategy. Well, unfortunately, so do traders. Traders have a strategy, and they start, the mind sees patterns, and they're like, oh, look, every time he makes a new low, it pops. New low, pops. New low, pops. Ooh, guess what? Next time he makes a new low, I'm going to pop it. I'm going to buy it. Yeah, well, that sounded good. Great strategy. It's like Mike Tyson says, everybody has a plan so you get punched in the face. Problem with that is, eventually it's going to do this. You'll buy it right here, thinking that, hey, I got a strategy here, and it just blows up. And that's when margin call comes around, and we all make fun of the margin call until you're the one on the margin call. And unlike casinos where you put up $100, you lose $100. Here, you lose a lot more than $100. So, my advice to you: don't do that. Don't do that. Please save yourself. Don't pick bottoms. Go back and look at my videos. All right. Um, so yeah, that's the analysis as far as the index goes. Now, if you go look at some 401ks and some other accounts, my God, they look like Mario Pool. It's bad, right? It's far worse than what the indexes are indicating. In fact, you go through some individual stocks and it's like, oh my God, they're down. And that's another thing I've seen on Twitter. They're like, well, the stock market is down. You should buy. That's not a reason to buy. That's stupid. But people are falling for it. They're like, yeah, that makes sense. Stocks are down. I should buy. Yeah, no, you shouldn't. No, you shouldn't. That's not a reason to go out and buy. You need a reason, right? And you got to have a good, solid macroeconomic fundamental reason to go out and buy. Now, remember what they were telling you all back here. Oh, the stock market doesn't care about fundamentals. They don't care about economy. No way. Wrong. Dun-dun-dun-dun. Wrong. Okay, so please, I'm trying to accelerate your learning process here. If you help me, uh, don't get cute with a bear market. Bear market rallies are, they're ferocious, as you saw in this move here and this move here. Right? They're ferocious, but that doesn't mean it's a bottom. In fact, these moves are designed to provoke emotion, to provoke fear that you're going to miss out, FOMO. I always tell people, be careful of four, right? Fear of risk. Stay away from fear of risk. You see risk, you run. Because risk, it's your brain telling you something is wrong. So, you know, again, these moves are designed to provoke emotion. And usually they come with a break of a trend line. Like this one. This structure broke. This structure broke. Okay? And that's why you get those big rallies. Think of these consolidations as guys at the track, right? With the comb over, of course, with the brute Fabergé. Place your bets, everybody. Place your everybody's placing their bets which way it's going to go next, and then there's a pause, and then it goes there, it does this, and whatever. Don't turn trading into gambling, please. Okay, learn how to be more sophisticated than that. It's a horrible game if you think about it in terms of casinos, because again, it's not just going to take $100; it's going to take a lot more than that. And unfortunately, when it blows up in your face, some of the destruction is so much that even if you're the best trader and you're 100% right, it'll take you a lifetime to recover. So please be very careful and think of four. Fear of risk. Stay away from risk. All right. Okay, so let's continue here. Cryptos, right? Look at cryptos. We talked about this in previous videos, right? It's a drop, 1, 2, 3, up, and then it's going to fail, and it did fail. And now we have 1, 2, 3, and then this is going to fail. It's just the way it is, and this is the total market cap of cryptos. Okay. Now we can say, and I did say in the previous video that this is well, not to you guys, but this is a key area that it could potentially pop from here. It could. Okay. And then you end up with something of a high base, Okay, well, where it will consolidate while the rest of the market tanks. Okay, that's possible. I'm not saying that's what's going to happen, but it's possible. That would be very bullish because if it does that, then this is going to break out eventually because this is the compass, right? This is wave one. That would be two. This would be three. Okay, and that would be extraordinarily, unbelievably bullish. All right. So something to think about. But if it starts to break down here, we can really see cryptos tank very, very quickly. So remember, this is a key area. Be really careful. We are building pressure at the bottom of this support area, and typically that is bearish for more downside. All right. Careful, careful, careful. Bitcoin. Okay. Same thing, right? You see, 1, 2, 3 down, right? It's just all right. Slow down, Nick. All right. So you see the compass, right? 1, 2, 3 up, fails, right? 1, 2, 3 up. What do you think that's going to do? Yeah, fail. All right. It's just the way it is. Now, again, I'm going to point out it's in a key area. It could potentially pop here. All right. I don't think that's what's going to happen, but if it does, it will not surprise me in the least. Okay, so I'm ready for anything. How about Ethereum? Ethereum kind of the same thing, but this is a little bit different because it seems to be floating or just dying away. Okay. Um, Again, same pattern. This can pop here. Blah blah blah. All right. All right. Let's talk about inflation. Now, look. If you go back to April of 28th, 2021, and this is why people got the transitory inflation thing wrong. They didn't understand what caused inflation. They still don't, surprisingly enough. Okay? It's very simple. When you print money out of thin air, you pass it out like candy, you're going to artificially stimulate demand at a time when everybody's sitting on their couch watching TV and going on Amazon and buying Nike sneakers. Well, if you're sitting on the couch and nobody is making Nike sneakers, you're going to create artificial demand, and then you will have some supply chain problems. Um, and it's not so much that we couldn't meet demand. Okay, don't. I mean, in certain sections, of course, there was, and there's some component to supply chain issues, but not enough to create the inflation that we've seen. It's way too much. Okay, the reason that we got inflation is because we artificially created demand. That all those dollars ended up in savings, profit savings. Okay, those profit savings were going to stocks, bonds, and real estate. Okay, it's clear to see. What happened was that as interest rates went to zero and stayed there, money started to flow out of stocks, real estate, and and bonds into commodities. And when it did that, it pushed up all the raw materials. That's the CRB index you're looking in front of you. It's a 13-year channel was going down. And I warned a year ago, more than a year ago, that this is a major breakout. And as you all know now, it's blown out. Boom. Keeps going up every day. So people are like, well, it's peaked. That's the new thing. It's peaked. It's peaked. Look, last year comps are going to be difficult to be, blah, blah, blah. Look, there's nothing here that says inflation has peaked. Nothing. And this is why they got it wrong. They don't understand why we have inflation. It's because excessive amounts of savings, of money printing that turns into savings for the top 5%, spilled over into commodities, pushed up commodity prices, pushed up raw material prices, and you have inflation. It's very simple. Inflation is always an everywhere monetary phenomenon, period. That's the way it is. The commodities are the great equalizer. So that's why they got it all wrong. And now they're all coming out. Mea culpa, which is code for I suck. I don't know what the hell I'm talking about. I was wrong. But they won't say it like that. It sounds better if you say mea culpa. And Unfortunately, that's just the way it is. But again, looking at this chart, this inflation is going to continue to go higher, and probably we're going to see higher inflation in Friday. It doesn't even have to go up much. It can just stay exactly where it is, and it's just as bad. All right. Let's go look at some other charts here. Look, Tesla. I was telling you this back on November 23rd, 2021. Classic, bare knuckle charting top. Okay. Look what's happened since. Come on, baby. I'm in a hotel, so my internet sucks. Come on, baby. There it goes. Boom. Okay. It was at 12. What was it? $1,200, and now it went as low as 628, right? And then it's popped a little bit since, right? But uh, beautiful, beautiful, beautiful call. Okay, but I did it when no one was looking, not when everybody's looking. Right? Here's a couple more examples: GameStop and AMC, and blah, blah. They have the same classic topping pattern. All right, so it's not random that I just guessed right. No, you can go through my diary and you'll see that's not the case. All right. Um, this chart got 36 likes. It should have been 3,336 likes. But this is important because if you look at every other time that in a bull market, okay, when we came down this low, it was just a little V bottom and up we went, V bottom, up we went, V bottom, up. Okay, it's not the same this time, and that's why I posted it. Not the same. It's not the same this time. All right, it's not the same, and since then, right, this was published February 10th. Since then, it has not been the same. In fact, we have been spending our time down here. It's not a V bottom like it was before. Why? Because it's not the same this time. It's different this time. We're not bailing out the stock market. Okay. So, great call again. I'm not patting myself on the back. I'm just telling you what it is. Right? It is what it is. S&P 500, inflation adjusted, 50-year channel. I'm like, hey, look, this is this is a little major breakdown here, right? It's a key area. What's happened since? You tell me, right? Boom. Take a look at this chart, right? Diana Shipping. This is back on April 28th of last year. And I said, look at this, right? This goes hand in hand with inflation, by the way, right? This is the only one that I had a bull side on. I had some other ones too, but one of the few that I had to the bull side. And I said, look, this thing is $3.78. Where is it at today? 613. It went as high as almost $7. That's a nice little chunk of change right there, right? This one is another one. This one got, I think, 3 likes. This is the Fed's fund rate, um, um, inflation adjusted. And here you can see where the Fed is fighting inflation. Okay, and here you see where it's easy money. Right, this is where easy money began. So, what do you think happened? This was my target. That was going to go negative 5.37. The next target. This was my first target. This is the second. Where do you think it went? I should have added like 5 targets more. Right? Negative 7.93. And people are running around saying, oh, we're QTing. Quantitative tightening. We're tightening. Tightening? What? We're so deep into easy money, it's not even funny. It's comical. It's dumb. First of all, there's no such thing as quantitative tightening. Okay? We're quantitatively normalizing because it's not normal for the Fed to carry $9 trillion on the balance sheet. So when we start to reduce the balance sheet, we're normalizing. We're going back to normal, QN, Q, normalizing. So it's silly when I hear people like, oh, we're QTing. What do you mean QTing? This is QT back here. This is not. We're still in easy money territory. Don't let them fool you with this stupid things that they come up with because they just don't understand what the hell they're talking about. It's frustrating. All right, let's continue here. Okay, look, the 10 years back up above. Where is it at? Oh wait, I got some more here. Here's another one. This is another beauty. U.S. family income in real terms, meaning inflation adjusted, what is